Hello, my name is Julie Kebach, and I have been invited today to provide a banking industry overview for the Jumpstart Teacher Training Alliance. I have been involved with banking services for approximately 15 years now, and I currently serve as the Vice President of the Corporate Risk Management Area for Fishback Financial Corporation. Historical trends in the banking industry. I thought I would just start out by giving us a couple of seconds to take a look back and see where have we come within the banking industry before we take time to look forward into the future, and where do we think that the trends are going to be looking into the future. So starting when we started, the FDIC, that is, started recording data in 1935, you can see that we had a total of 14,000 institutions, total institutions out there, and most of those were just institutions that had one location. You can see that over the years we've now gone to just under 6,000 locations, right at 5,876 locations, with a majority of those locations now having, a majority of those institutions, that is, now having multiple locations. You can see the asset size has grown significantly from $46 billion to over $13 trillion in total assets within the U.S. banking industry. Also did a quick breakdown here too, because the number of actual institutions, as you can see here, is the same between these two charts. However, the one thing that I wanted to point out is how we've actually grown in the number of branch locations, the number of different locations that people can interact with our financial institutions throughout the country. And so all over the total number of institutions has decreased. You can see we now actually have more locations. For those of you out there who actually learn better from pictures instead of numbers, I have included a couple of slides that just show the same information from a graphical analysis. You can see here again that that number of one location institutions has decreased significantly during the same time when the multi-location institutions has increased, but all the time with our total number of institutions decreasing over the period that was recorded in the data. The location trends, although, like I said, our total number of institutions has continued to decrease. That's what the dark green line shows us here. You can see the number of different locations we have throughout the country has increased substantially. And then on the last, just how our asset sizes have grown. And so as an industry, we've seen significant growth over the last almost century. One of the things that I wanted to take a second to highlight, a lot of people have probably heard about the banking crisis, and some institutions that were identified as being too big to fail over the last few years here. And so this graph here just shows us a real quick gives us a real quick understanding of the number of failures and problem banks that we were experiencing over the last few years here. These were record numbers of failures that we had and problem banks. But as you can see now here in 2014, those numbers have changed significantly for the banking industry, and so hopefully we are in a recovery period for going forward. Another way that we like to look at the banking industry is what are the classification of banks. As you can see by this chart here, we have a majority of our banks, nearly 90% of our banks, are under that less than $1 billion in asset size. Asset size being a common way that we measure the size of an institution. That $1 billion, less than $1 billion in asset size is what we often refer to as the community banks. Here in the middle, where you can see that we have these that are kind of in between the less than $1 billion and over $100 billion, these are the ones that we refer to as our regional banks. And those regional or mid-sized banks make up approximately 10% of the institutions throughout the country. And then those over $100 billion in assets, you can see, is just under 0.5% as of June 30th of this year. Now, the interesting thing to compare to this is, although nearly 90% of the institutions are under $1 billion, they only hold less than 10% of the total assets. So it's very interesting to see how that compares. You know, we've got less than 0.5% of the total institutions holding over approximately 64% of the total assets. These large institutions tend to be those with international banking locations as well. Just a little bit more on historical trends in banking as for some information background that we're going to be talking about here earlier. The regulatory agencies have also shifted over the past few years. You can see the 4 different agencies listed here on this first slide. Of those listed, we've actually experienced some recent change. The Office of Thrift Supervision, the first one, has actually merged with the OCC. And then in addition to that, we have on the next page here created a new regulatory agency in the last couple of years referred to as the CFPB. You'll notice that I have identified the NCUA, but generally speaking today I'm not going to talk a lot about credit unions or their supervisory agency. And so for these agencies, there's the FFIEC that is actually referred, or it serves as a joint agency where all of those bodies get together and come up with common rules and different supervisory practices. The main purpose of the supervisory agencies is to provide rulemaking authority and supervision or examining banks to make sure that they are in fact following the different rules that are out there for them. Now, after we've taken a historical look at the trends in banking, what do we think is the future holds for the banking industry? Well, as you could see from the graphs and the numbers that I had displayed earlier, we do believe there's going to be continued consolidation throughout the banking industry. You know, the large banks are only getting larger, and the small banks are becoming fewer and fewer in number. So consolidation, the impact on the community banks is there will just be fewer and fewer community banks out there. You know, the impact that this is going to have on us as general consumers is, you know, some of these banks are becoming too big to fail. And so in light of that, there will be some different things that could be happening in terms of regulatory oversight. This could lead to increased fees. However, on the flip side, some of the positive things is that, you know, we'll have increased opportunity for new technological services, more products and services available to us in light of, you know, the banks becoming bigger. One other drawback that we could have for consumers, the community banks tend to be very focused on service and able to make decisions at the local level, whereas when you get into the larger banks, unfortunately, the service will probably slow down a bit because there's much more centralized processing that needs to occur. Another trend, future trend for banking is going to be increased competition from non-banking financial service providers. What do I mean by this? These are going to be your companies that refer to themselves as payday lenders or car title lenders. They might be the prepaid cards or the American Express Serve product. Apple just came out with their Apple Wallet. There are different companies out there offering remittance transfer that would offer those living in the U.S. to be able to transmit funds internationally to families back home and other things like that. Also, we have service providers like Western Union that offer wire transfer services and things of this sort. So I do expect to see continued increase in competition from those types of service providers. Other future trends in banking. We are currently in a state of historical regulatory reform. We've never seen so much regulation coming out of Washington and from our regulatory agencies. The impact that this is having on banks, I'm going to start off by talking about community banks, because that's where we're unfortunately probably going to see some of the greatest impact, because many of these small banks are not going to be able to keep up with the regulatory changes. And as a result of that, they're going to stop offering certain products and services. And of course, that is going to have a spillover effect impact onto our consumers. They'll have less access to products and services. I know right here in South Dakota, some of our smaller banks are discontinuing offering mortgage loans to the homeowners in their communities in which they serve. And that's just a very disappointing part of the regulatory reform. One thing that Washington is trying to do is they are taking a look at the size of the banks, and they are trying to put the larger burden on the large banks, having greater regulatory scrutiny and greater regulatory burden there. But the community banks, unfortunately, don't necessarily see a lot of relief from those differentiations because we still have to compete with those larger banks. What are some of the other impacts that we may have on consumers? Unfortunately, as banks have to enhance their systems and processes to make sure to keep up with these changes in regulations, there's got to be a way for the banks to recoup those costs, and that typically ends up being passed on to the consumer in terms of not as favorable interest rates or higher fees to help us cover those costs. On the flip side, though, consumers in most instances are being offered greater protections as a result of this regulatory reform. A couple of other topics that I just wanted to throw up here: the current interest rate environment, monetary policy, fiscal policy, and how our friends at the Federal Reserve are handling the interest rates is also putting some pressure on the banks. Right now, we're at historical lows, and it's forecasted to remain the same. So banks are having to come up with alternative ways to earn their money. And one of the ways that we're doing this is through fees. And I talked a little bit earlier about some of the increases in fees because of the regulatory burden. But one of the other things is as the regulations are coming out, our regulators are now putting in limits on how we can assess fees on our customers. And so banks are becoming very creative in the ways in which they will assess fees. And so I can't encourage us as consumers enough to make sure to check our disclosures and understand how our products and services work and what fees may be associated with them. What are some of the hot topics that we have in the banking industry right now? Well, hopefully, we're not all living under a rock and unfortunately have seen on the news all of the cybersecurity issues we've recently been experiencing within the banking industry, whether it's Target or Home Depot or some of the smaller ones such as Dairy Queen and Taco John's, Jimmy John's. When it comes to cybersecurity, that's one of the banking industry's greatest challenges right now is what are we doing to ensure the security of our systems and ensure the security of our information that we have. We need to have the right systems in place to protect all of that information. In the banking industry, it is very common for us to have to work with others in order to offer products and services. And so because of the cybersecurity threat, it's growing in importance that we understand how those service providers, the vendors we may work with to provide you your services, are doing business and what their security practices are. Just to give you an example, if one of the things here at our bank, we don't offer online banking. Internally, we work with a service provider to offer our online banking service, and so we need to understand what that vendor is doing to make sure that their services are being held very secure and what their policies and procedures and practices are in place. And of course, with the information security breaches and things like that, fraud is increasing dramatically. We're seeing historical numbers of losses and fraudulent cases right here in the United States. One of the reasons for that is because of our late adoption of the EMV technology for our debit and credit cards. We're one of the last countries to get up to speed with that because we know that it's going to be a significant infrastructure cost. On the consumer side, they actually probably don't feel the same level of impact because what they're dealing with is maybe some new cards and having to update the account information. Unfortunately, in these fraudulent cases, it's the banks that are eating most of the costs. And so again, this is another way that costs are rising for banks, and banks are having to become more creative in how they're recouping losses such as this. We're also hopeful that we can have some assistance from Washington, D.C. and maybe holding merchants and others more accountable when their systems are in fact hacked and that information is leaked out to the public. What are some other hot topics that we have within the banking industry? Well, we talked a little bit about regulatory reform earlier, but some of the hottest topics impacting us globally is going to be that related to anti-money laundering. The government expects that banks know who we're doing business with from a customer perspective. The government expects that banks serve as their eyes and ears, and we have certain reporting requirements that we need to meet, certain monitoring requirements that we need to achieve. And these are some of the biggest cases you may have seen within the banking industry right now. Some of the large banks such as HSBC and others settling suits because they did not have proper processes and systems in place to detect money laundering. And money laundering is usually how drug traffickers clean their money, get it back into the banking system, or how terrorists finance their activities. And so that's why anti-money laundering is such a hot button right now. A couple of the other things that you will notice is a shift from what used to be known as fair lending to fair banking. In the 1970s, fair lending was very much a hot topic. Oftentimes, a single white female would walk into a bank and ask for a loan, and unfortunately the lender would reach across the desk and tell her, honey, you come back on here with your husband and we'll see what we can do to help you get that car. Well, I'm sure, as you can expect, that did not go over well with a lot of individuals, and so it causes some shift back in the 1970s for fair lending or fair credit. We're seeing further shifts from that concept to actually fair banking in general. We need to make sure that we're providing all of our customers with access to fair credit products, fair deposit products, and that's what gets down into that next topic that I list there, unfair, deceptive, and abusive practices. That's one of the things that's a real regulatory hot button right now within the banking industry, is just making sure that we are treating our customers fairly. Now I'd like to shift to some different types of banking, the different ways you're able to interact with a bank. In today's banking world, we have traditional banking. And in the traditional brick-and-mortar bank style, you have your products and services broke down into, we'll just talk about three major business categories. We have personal banking, business and ag banking, and wealth management. Under the personal banking category, you have things like your traditional checking accounts. A couple of the things that I would encourage you to do here, some companies are still advertising for free basic checking. Just make sure that you understand, is it truly a free account? Are there different fees that are tied with that? There's also rewards checking that has become very popular, whether they're paying you in terms of a higher interest rate or some other reward for how you're using account. Again, just make sure that you understand what are the requirements in order to earn those rewards, and monitor your accounts to make sure that you're meeting those requirements as outlined in your terms and conditions. There's also going to be other accounts such as interest-bearing or premium checking accounts where you can earn interest, but that's when certain requirements start being implemented, including fees or balance limits and things of that nature. In terms of savings accounts, there's a typical savings accounts that a very, very minimum balance is required, or very low fee type savings account, up to your higher investment type accounts in terms of saving. We may also have certain savings clubs for children or things of that nature that you will see to encourage children to start learning about the banking industry. And of course, health savings accounts is becoming a much more popular thing that you can learn more information about from your banks. Debit cards, prepaid and gift cards. The things here to understand is, what are your rights and responsibilities when it comes to using these different products? If you're operating under a Visa debit card or credit card, Visa actually offers some different protections from a zero liability perspective. There's different ways that you can go about accessing ATMs and understanding what fees may be charged in an ATM, or where do we have surcharge-free ATMs. Certificates of deposits and CDs and individual retirement accounts are a couple of the other things that banks typically offer. These tend to have longer Rates to maturity a little bit higher, savings rates right now, and the only thing that you need to keep in mind here is accessing those funds becomes a little bit more difficult the further you move away from a checking account. Those funds become less liquid. What are some of the types of the loan products that we have on the personal banking side? We may have things like installment loans for purchases of vehicles or vacations or recreations or things like that. We may have things like student loans. Then, of course, we have things like mortgage loans. We'll have home equity loans, home equity lines of credit. There's different types of conventional mortgage loans. You can get a fixed rate mortgage where your interest rate is fixed over the term of your loan. You may also wish to, if you're interested in taking on a little bit more risk, your interest rate may be able to adjust on the mortgage loans. There's some different programs that we have on the mortgage lending side that I would encourage you to become familiar with. First-time homebuyer programs, certain programs offered through the government, such as the Fair Housing Authority, FHA or VA, or rural development, or veterans with the VA may have some special programs there. Excuse me, let me just go forward here. Other traditional type products include those listed here on this slide. Credit cards, again, encourage you to become familiar with your credit card programs. There are some different websites that we'll be talking about here in a little bit that you can go check to compare the different credit card offerings to make sure that you're getting the right product that works best for you. Safety deposit box, cash checking, or check cashing, excuse me, wire transfers, foreign remittance transfers, insurance, and ID theft protection. We're going to be talking quite a bit about ID theft throughout this presentation and the next one. And so those are some great services that banks are offering personal consumers today. Now let's shift a bit and let's talk about business and ag type banking products. Under the business and ag type banking products, some of the very similar that we would have on the consumer side, checking accounts and savings accounts and debit cards. Again, just making sure that we understand how these products are set up and what are the different features and functions that come along with them. Some of the different things that are offered to business and ag customers, though, are different payment solutions. Are there different ways that our customers can make payments, whether it's via online payments or through our cash management services and things like that. We do have various business loans, some of them offered actually through government programs, such as the Small Business Administration. And so we'll want to make sure that you understand those opportunities. We may also finance purchases for equipment, business expansion, real estate, construction loans, or just real estate loans, certain lines of credit. Very similar financing options on the ag side as well, but just specific to ag, for example, for crop input, livestock, farm machinery, and so on and so forth. Businesses, we also have credit cards that we can offer to them, and then merchant services is quite popular with the business side of things because we need to be able to support the merchants that are out there who accept the credit cards and make sure that they understand their rights and responsibilities and have access to the systems necessary. Wealth management is another traditional banking service that's out there available. The services are listed here below for your information. I would just encourage you to contact your bank for more information on the different financial planning services that are offered there. Now let's shift to online banking. For personal, the online banking experience includes the ability to open accounts online, view your account balance and transaction histories, access your statements online, see when your loan payments are due and what those payment amounts are. You can transfer funds between accounts. You can set up alerts on your accounts. You can access bill payments. You can pay your bills online. You can actually do person-to-person transfers. This is maybe from me to my sister for an expense. Maybe it was paying her back for a meal. And then there's various online financial management tools that most banks will offer through their online banking services. As far as business and ag online banking services, very similar as you'll see to the personal side. But then we get into, again, more of those cash management services and e-deposits, electronically being able to make deposits for the business and ag customers. Your cash management services might include certain security features to help make sure that we're minimizing fraud for the businesses when checks and other payments are coming through. And then one of the most recent trends in the banking industry is the advance in mobile banking. In mobile banking, most of the time we're able to do something similar to what we do with online banking, but just do it right through our telephones. You know, we can pay bills, we can view our transaction histories, we conduct account transfers, set up account alerts or receive account alerts, do remote deposits, take a picture of my check and have it deposited into my account, or person-to-person transfers. What are some of our customer rights? One of the things that I just want to touch on quickly is commercial customers versus consumer customers. The Washington, D.C. views that if you're a commercial customer, you're probably more business savvy and maybe don't need the same protections that you do as a consumer. So consumers are just generally offered significantly more protections when it comes to the banking industry. Another customer right that everyone can expect is the FDIC insurance coverage. This is on accounts up to $250,000, and you can visit FDIC.gov to learn more about how you can stay covered within those limits. Privacy is another customer right. How it is your right to understand how banks collect and use information, how it's shared, and what your rights are for opting out of that information shared. As far as consumer rights, the thing that I can't encourage you enough is this information is publicly available. There are several resources out there that you'll see, some of them listed at the resources page at the end of the program here. Please take a look at that and become educated. Again, like we talked earlier, consumer protections really focused on making sure that our customers are being treated fairly. Please make sure to take the time to request and review shopping disclosures. All of the rights and responsibilities that you have are discussed in theirs. If you have unauthorized transactions, whether it's on deposit accounts or errors on your loan accounts, just make sure to contact your bank. What do banks expect of consumers? What are their responsibilities? The first key is educating yourself. Be sure to compare alternatives, request those shopping disclosures, review the terms and conditions before entering into account agreements, ask questions. It's always important to ask questions. Abide then by the account terms and conditions that you agree to. Review your account transactions routinely, report errors or disputes to the bank in a timely manner, and cooperate with bank for reporting investigation purposes. So as I mentioned here just a couple minutes ago, there's some different resources here that offer great information to consumers in terms of what their rights, roles, responsibilities are, how to go about getting different accounts, some of the different tips that people may wish to consider. With that, that is the end of the banking industry overview.